Hey, it's Pete Krull, and we are back with another episode of Dollars and Change, the expert's guide to sustainable and responsible investing. And I am in Washington, D.C. We just finished up the US SIF, the Sustainable Investment Forum Conference for 2025. We're recording this at the end of June, and I am really excited. I have Maria Lettini, the CEO of US SIF, sitting with me. I'm excited to chat with you, talk about sustainable investing, talk about where we are, talk about the conference, all kinds of stuff. So welcome to the podcast.
Thanks for having me.
Excellent.
Delighted.
So you came to US SIF about 2 years ago.
Yep.
Tell me a little bit about your background. FAIRR was the organization you were with before that. What did you do there? How did you get to where we are now?
Well, I started out my career actually in investment banking, so
Okay.
A little bit boring, but it definitely sort of had a seg into sustainability always. So started out my career in San Francisco with JP Morgan, was doing global equity sales, and part of that actually was involved in looking at equities that were in emerging markets. And when you think about equities or any asset really that is coming out of emerging markets, there are a lot of environmental and social implications to a lot of those companies. And so I moved then to Deutsche, working out of New York, doing Latin American equity sales. So again, the research, the companies that we covered very much had a environmental and social component when you think about the risks and opportunities that
because you don't have as much regulation in third world countries typically, right? And so there's more.
Maybe not as much regulation, or maybe some regulation, a lot of privatization at the time when I started out. There was still a lot of discussion about how you privatize utilities, how you privatize mines, what it means for privatized sort of gas companies, all which have pretty inherent environmental and social risks.
Yeah.
So there was always a real interest for me in those aspects of those companies. I moved to Madrid also with Deutsche Bank. I took some time off to start my own restaurant in Madrid, to have kids in Madrid, and then I moved to London. And I always then, I took some time out to raise my kids, about 5 years, and then I thought, okay, I want to come back into the market. I'd love to do something at the intersection of maybe development finance, something that had some component of sustainability.
Yeah.
But that was in sort of early 2000s or about 2010. Okay. And I was thinking, how can I kind of get back into the market, sort of reskill? And I went back and got my master's at King's College in environment, politics, and globalization. So that was a really interesting time.
I was going to say, that sounds like a really interesting major to really focus on, because it covers such a wide breadth of experience, right?
Post banking crisis.
Yeah.
Really interesting time to rethink finance. And it was really serendipitous that I got into sustainable finance. So I was reading the FT one day, and I noticed an article about Norges Bank. And Norges had always been a leader, the Norwegian sovereign wealth fund asset manager, in governance principles, and actually looking at their portfolio and actually putting it over a governance filter and creating sort of a list of companies that they were allowed to invest in. Okay. And I was like, what is this? Like, what? Like, that sounds really interesting. Yeah. And serendipitously, I had a friend whose husband worked at Norges Bank, and he was like, this is our investment principle. This is how we look at our portfolio and our investable universe. And really, it was just through that lens that I then did my dissertation on ESG investing. Okay. And there was nothing, that I could find out there really that much in the academic space. There was a bit, but that sort of took me through the trajectory of finding the UNPRI, which is where I started, and then moving on to food systems risks, and then ending up here in the US because, it's the right time, I think.
Absolutely. So I want to take a step back. Tell me about the work you did at FAIRR.
So FAIRR is an institutional investor network, again, a network of investors, and there they still ongoing produce research, practical tools, collaborative investor engagements around the risks and opportunities associated with intensive animal agriculture.
Okay.
And it was actually really interesting, sort of a deep dive into the theme of food system risks, but looking at how companies and investors are exposed to how their assets may be using like animals in the food system.
Okay.
So, big food manufacturers, what component of their product portfolios are exposed to actual animal products,
Okay.
and how that might be creating hurdles to reaching their climate goals, thinking about how they're exposed to deforestation, what that means in terms of their underlying products being exposed to pollution, creating pollution, receiving pollution, or things like
Sort of like
antibiotics.
supply chain kind of stuff. Yeah.
So really interesting. It was an area at the time that investors weren't really looking at.
Right.
And it ended up being sort of, again, maybe right place, right time, and really helping to drive investors looking at, the risks and opportunities in the food system.
Yeah, I think food systems are such an important part of how we look at the world, because obviously if we don't have a good food system, we're not surviving here. And everything from that side of it to, we had a speaker series a few years ago where we got into food waste, and there's so much on the food waste side. So you got both ends covered, where we've got issues that we really need to come together to figure out. So you're at US SIF now. You've been there 2 years. I had a conversation the other day with one of your colleagues, and he basically was talking about hiring you on, and that you were the natural choice, and you were perfect for coming into the role. Tell me a little bit about what excited you about coming to US SIF.
So look, US SIF has been the premier network of sustainable investing for 40 years. And I tell this story all the time, but like sustainable investing grew out of the US SIF network, right? The other networks that people may know of now that exist globally actually have come since SIF was actually developed.
Right.
So our investors in our network are actually the pioneers of sustainable investment, going back to apartheid, going back to Vietnam War. These are the people who actually stood up for the injustices that were occurring then, and actually, thought about ways that they could integrate that into their own investment portfolios, right? To me, this was a great place to come sort of back to the roots of sustainable investment. And that, in addition to the fact that I do think that the U.S. has been and still is, at the forefront of the headwinds and the blowback from anti-ESG investing, right? So when you think about what's happening in the investments, in the advancements globally around sustainable and responsible investing, we would have expected, given the innovation, the knowledge, the assets that are sitting here in the U.S., for the U.S. to be much more of a powerhouse in moving in this direction. And we just haven't seen that growth across the U.S. capital markets that we would have liked to see. And now, particularly with what we're facing with this administration, I think it's the right time to have a strong voice, and US SIF seems to be the sort of right vehicle to be able to sort of keep steady in this environment.
US SIF is a natural leader for us. It really is, and I couldn't agree with you more, because the reality is that the ESG, or responsible investing, or however you want to phrase it, opponents are actively putting disinformation out there, not just misinformation, but actual disinformation. And as an industry, we need to be just as strong and if not stronger, in pushing the real message out there. Because that's what I find, even again with this podcast, a lot of it is talking about, here's what the real deal is. Here's what ESG really is. It's about risk on a company, not risk of the company. These different things that politicians and the media really need to hear. And so, I think your opportunity, and it truly is opportunity, is being that thought leader.
Yeah, and it's really, it seems the irony is not lost on all of us, right? Like, we are disenfranchising the communities that a number of these politicians represent.
Right.
So it's very odd for us, for at least this community and all of us who have been working very hard to try and cultivate it, to try to have to dismantle the disinformation that's out there, because
Right.
we're working in service to grow and support the underlying investor, to grow and support the underlying beneficiary, to offer opportunity and grow a universe of possible investments across asset classes. And it just seems counterintuitive that we would be seeing politicians almost make decisions contra to, this purebred, red-blooded capitalism
Yeah.
that underpins what we would normally assume is the U.S. capital markets.
Well, I think if I can translate just a little bit, it's folks who are for deregulation wanting to regulate an industry in many ways, right? And I think that for us, as a an RIA, our job is to help clients align their investments with their values. We're a fiduciary, so we want to do what's in the client's best interest all the time. And trying to distract us, which is really what's happening in many ways, takes us away from what ultimately our mission is.
Yeah. Or in some cases, I would say, and potentially, you know this better than I would. Scaring clients to thinking that we possibly may be going down an avenue that would not be delivering above market returns, which is absolutely not the case, and it's absolutely is not part of the foundation of how we approach our work.
Absolutely. So, aside from the advocacy work, let's talk a little bit about policy, which is sort of advocacy, but just in a different direction. Brian, who works with you, does a lot of policy work. What's some of the work that you guys are doing right now?
So we focus a lot of our time on education. So, and dispelling these myths. And it's particularly important now, building on what we were just talking about. So the US SIF was a founder of the Sustainable Investment Caucus, which is a caucus that sits within Congress. We have partners within Congress themselves. Representative Sean Caston of Illinois, who was a speaker at our conference. Representative Juan Vargas out of California, also one of the co-founders. We want to make sure we are dispelling the myths amongst the House and senators, and make sure that they also understand what we're talking about regarding sustainable investing. So that's one avenue, and we do bring investors, as we just did through our member Capitol Hill Day, to go speak to their representatives on the Hill to do exactly that.
I was there. I did it. It was great. And some of them listened, some of them didn't, but all of them showed up.
Yeah.
And I think that's important.
And, you went to see your representative. So we bring people that are in their constituency to say, this is what's important to us, and this is why we're doing it.
Right.
That's one part of the work. Another part of the work, especially in an environment that we're seeing now, is to make sure we're informing our members.
Okay.
So there's fast and furious executive orders, a lot of dismantling of a lot of the work around climate disclosure, a lot of the work about progress that had been made about human capital disclosure. We want to make sure our members know the state of play, what's coming out of Washington that may affect how they do their own work and could potentially sort of put headwinds on how they may be managing their own funds.
Right.
So that's also really important. We want to make sure that they understand how they should be describing their funds, how they're describing their work, how they're describing their teams. We want to make sure they understand where the regulation is going. And in a lot, unfortunately, of the work that we've been doing now is to sort of bring a legal perspective to our clients, to our members, so they understand that actually being good stewards of capital, speaking to companies about about their strategy, about their risks, is not doesn't open them up to legal risks,
right,
so that they can continue to do the work they're doing, and so that the government isn't interfering with the right of investors to make the decisions around their portfolio.
Well, one of the other things that we talked about when we were on the Hill the other day was shareholder rights and because there is a threat to shareholder rights as well. And a lot of we're not necessarily one of them, but a lot of the other organizations that are part of US SIF are active when it comes to shareholder advocacy, right?
Yeah, that's right. So we have a lot of members who file shareholder proposals that support shareholder proposals. And, that is one avenue, particularly for smaller investors, where they can come together, have their voice heard, and speak to company management at their AGMs about certain issues that they think are going to have a financially material impact on a company's bottom line, and they want clarity in order to protect the long-term value of their own portfolios. So that's a really key element, and in a way that shareholders can make their voice heard. And we're having a whole range of tools be attacked from an investor perspective.
Yeah. So you sort of sit at really the nexus, if you will, of sustainable investing, ESG, all this. We've talked a little bit about some of the challenges, but where are some of the opportunities that you see for us going forward?
I think investors still have the opportunity to use their voice. And we're, navigating and trying to find the best way to do that in this environment. I still think there's plenty of environmental and social opportunities that are out there. I mean, one thing that we heard at our conference this week, and I don't think that surprised any of the attendees, is that the energy transition is ongoing. It's ongoing irrespective of what we may be hearing from the President of the United States. We had former Congressman Curbelo speak. We heard from Representative Sean Cascading. Both of them have said, this train has left the station. We have allies on the Hill. Congress understands that their constituents are benefiting from this transition. It's creating jobs. And it's creating actually vibrant economies in some areas of, particularly red states that perhaps need to shift in this transition. So there are a ton of opportunities that are still ongoing with the energy transition, and, and solutions providers that aren't just your normal wind or other kinds of alternative power, but there's underlying, components of that. I think there's a lot of opportunity in AI. It's an area that, that is moving at a very fast pace. And there's a number of different components that feed into that. So I think, our whole economy is shifting. And there's a lot of opportunity for investors not only to reap the benefits of that, but also to have their voice heard and and help as we consider some of the risks that are associated with such a fast-paced transition into a completely changing economy.
Yeah, I think some of the statistics that are important to point out, $2.1 trillion was invested in 2024 in the energy transition globally. That is just a massive amount of money. 3.5 million people are involved in the energy transition in the United States right now. Relative, and I think it's important to see relatively so that the fossil fuel industry employs about 1.7 million. So twice as many people are involved in the energy transition as fossil fuels, and that trend is not changing. That is going to continue to go up. And so, exactly what you're saying there. This train has left the station. I say that all the time. That's my phrase as well.
Yeah, and look at where the country is from a social perspective. Yeah. I think we want to support local communities, towns, cities, and as you support them with underlying new infrastructure, that just helps grow. It has a multiplier effect, right? So
and one of the concerns, when we're filming this right now, where Congress is really talking about the reconciliation bill, and one of the things that's potentially going to be cut, and by the time you see this is probably going to be history. But the reality is that like residential solar, most of that is installed by small local businesses, and that is a major risk. I know in North Carolina, part of that employment, we have 110,000 people in the energy transition in North Carolina, according to E2, and a lot of those people are in small businesses that are putting solar on roofs for residential folks. And so I think a lot of times the powers that be are thinking, we're going to save money by doing this, but they're not actually thinking of what the cascading effects are and who it's going to hit at the end.
Yeah, and that's just one component. Again, that's going to actually affect real people on the ground, Main Street companies.
Yes.
But, we had a lot of conversation at the conference about physical risk, like the effects of climate. And, this is something that investors are also closely watching, right? Because they have investments that are affected by extreme weather events, fire, flood, etc., that are now uninsurable, and that actually does affect people on the ground. How are we going to rebuild communities? How are you going to rebuild, rebuild your community? What happens after fire? What does it mean to not have an insurable property? Do we have to move? I mean, and we have kids in school, we have to move because we no longer can insure our house because we're on a floodplain, we're in a fire zone. And I think it's going to really markedly change what the US looks like from today.
It was one of the things, like once Helene came through and, we were living out of our house for 2 months, one of the things that occurred to me, and I don't think you and I have talked about this before, but that SRI needs to evolve. SRI needs to evolve from like sustainable responsible investing to sustainable resilient and innovation investing. I think that is sort of a natural progression because in a changed climate world, resilience is going to be key. So how are we going to deal with those physical risks? How are we going to deal with the insurance crisis that if we're not in it now, we are definitely damn well going to be in it in a few years with the concept of climate gentrification, where the only people who can live in these high-risk areas are the people who are going to be able to self-insure. Our industry needs to continue to evolve, and I think it is. And I think through like US SIF, we have that opportunity to have this group of people who are coming together on a regular basis who can actually say, all right, where are we now, but where do we need to be?
Right. And it's not just, I just want to reiterate, it isn't just about risk, right? We have investors in our network across the entire capital markets value chain. So one of the sort of differentiating factors about our member network is that, we have, banks, we have green banks, we have community development finance institutions, we have financial advisors like yourself, we have wealth managers, we have NGOs, we have, academics, all the way to the big sort of institutional asset managers like the bigger Neuberger Bermans of the world. And there's a variety of different ways that you can think about what's happening in the world and where those and where investments dollars can go. Right. So we have Calvert Impact, who was was one of the big recipients of.
They've been using them for years.
So who's deeply involved with the Greenhouse Gas Reduction Fund, who again are using that money to put that money to work to catalyze capital, to bring investment to vulnerable communities, people who need it most. So, this is an opportunity really to have a really broad range of investment opportunities. And it's really fantastic to be at a network where it isn't just focused on one type of investor or one type of actor.
Yeah, no, I think that's great because we look at it less from a risk perspective and we look at it more from an opportunity perspective, bottom up. What are the companies that are leading us into a cleaner, more resource efficient, more resilient economy? That's where the opportunities are. I think most people don't think about infrastructure, and this was part of the resiliency part that really hit me post-Helene, is that we need to be investing in a more robust, a more I don't know what the right word is here, but an infrastructure system that is going to withstand not the storm that hit yesterday, but the storm that's going to hit tomorrow that's going to be 10, 15, 20% more intense than the last one. And that's an opportunity because in Asheville, there were 3 systems. There was the communication system, there was the utility system, and there was the transportation system. All failed. Those are all infrastructure opportunities, and that means they're all investment opportunities too. So.
And I think the important thing about now is, for better or for worse, a lot of these issues and challenges that we're facing are very tangible.
Yeah.
So I imagine with your clients, when they're thinking not only about their own investments for now and their own retirement, but intergenerational wealth. Yeah. I know my kids. This stuff is front and center for them. Like they're not messing about. They know, they want to understand or invest or even, buy their own food with the companies that are actually exhibiting the values that they think we require of of our country right now. And I think we're at that nice pivotal time where education is important, but most of the companies that we're investing in now have heard of this stuff.
Right.
So, there's kind of no turning back. They need to be able to demonstrate and articulate what their strategy is that will help deliver for the world we require. And they should have answers and strategies about how they are spending their capital expenditures to make sure that they're still going to be around tomorrow, or maybe it's not a good investment, right?
Yeah, I had before I came over here, I met with one of our Prime Capital office in Bethesda, and there was we were talking about next generation there, and we were talking about the fact that 99% of Gen Z and 97% of millennials and 86% of Gen X are interested in sustainable investing. And we were talking about if you're a financial advisor, this is data coming from Morgan Stanley. If you're a financial advisor and you don't have a sustainable investment option, these younger generations are going to look elsewhere. It's sort of it's table stakes anymore. And so I like the fact that we're evolving in that direction, because it's going to be these next generations that are pushing this, because this is a purely supply and demand thing. I mean, this is economics at its core, right? And the opportunity is there, and if we're not addressing it, then they're going to go somewhere else.
Right, exactly. And we now know, even on the consumer side, we're being very selective as consumers, right? Like you don't like Target's ethos anymore. You're not shopping at Target. We have a lot of choices, and people are now using their wallet and their feet to be able to make choices.
I love
and
it.
That translates right into your investment portfolio.
Absolutely. So I want to be cognizant of our listeners' and viewers' time here. So everybody gets the same last question, which I didn't give to you beforehand. So we had a hurricane that hit. Yeah, you're going to give faces there.
No.
We had a hurricane that hit Asheville, 500 miles inland.
Yeah.
We've had fires in California. We've got all these different changed climate events that are happening. So we know what's going on. But in light of all that, what gives you hope?
I think, a lot of things give me hope. I think I genuinely believe in the spirit of human nature. Mm-hmm. I think we will find our voice even in this administration if it means you're going to buy product X over product Y. Mm-hmm. You are not going to go on this vacation with this hotel group because they're not treating they're treating their employees well. I think we also need to speak up. We need to speak up and call our congressmen. It's an absolute critical time, and we all have voices. So it gives me hope now, and I think we're going to come out of this hell by being even stronger as investors, being even stronger as in our communities. And I think this is the only way from here. I mean, maybe we're starting from a low base, is up.
Right. Sort of a trial by fire that's going to really sort of galvanize us, if you will. Maria Lettini, I can't even say your name. Maria Lettini, thank you so much for your time today. I am grateful. This is it's wonderful to have you on. I've enjoyed. We've been on panels before, so I've enjoyed having this conversation with you. Thank you so much for spending some time with us today. Please make sure that you like our episode. Please make sure that you follow us on all your social media, and also make sure that you have got your copy of the Sustainable Investor book. I would greatly appreciate it. Thanks again. Have a great day.